Good morning, everybody, and this is your S&P 500 day trade setups for today. So I just want to start off on the monthly, and if we just go back to January was a bit of a pin bar range type bar, no real structure to it, but a fairly long tail to the upside, which is indicating that there are sellers sitting there. And currently we are still busy with an engulfing bar, so that is bullish, and we're basically, what the bulls are looking to do is to close above the previous month's open. So that's the first prize. Second prize is going to be a close above the previous month's high, because that's just going to give a probability for a stronger move to the upside. Now look at our oscillators on the monthly. They are grouped together, and the last time they grouped together like that, we had this pretty big sell-off in the beginning of the year last year. Now if you look further back, you can see it can stay like that for an extended period of time. Anyway, don't read too much into that just yet. If we move on to the weekly, you can see we had pretty much an inside bar last week. This week is looking like a confirmation. So that is the one thing that you need to pay attention to right now, is the probability of this starting a bit of a correction. And the one that we want to pay attention to is the 8 hour. So the one thing that is bugging me here is we're back in this area of consolidation, and it's basically between the 3900 and 3800. That's basically what the movement is at the moment. We did get above 3900. Did a couple of things, made a bit of a head and shoulders there, pulled down, met the target, buyer stepped in, drove it up, made a new high. If you look at that, didn't make a new high, but tested the previous high, and then immediately sold off yesterday. This has been driven by noise. The last 2 days, it's been the Feds that have been busy with their speeches and the way the economy is designed and where it's going and blah blah blah. But the market is not reacting to what they're saying. Well, it is reacting, but it's reacting to the opposite effect that they're trying to make it react. So we're sitting in a situation where where bad news is good news, firstly, and then the next day good news is bad news type thing. So it's just really it's just confusion, and I think until we get the politicians to finalize a stimulus package, this is what's going to happen. And this must be the longest negotiation of a stimulus package in the world. But I'd hate to see what would happen if they were actually wanted to distribute food to people and the politicians were arguing like this over that. I think some of the preppers have got the right idea. But anyway, let's leave politics out of it for now. They are negatively impacting us, so there is a bit of an issue. But at the moment, big down, big up, big down, big confusion. I really can't see an opportunity into this year. So yesterday with this break, I would have expected some kind of a pullback to 38.96, and from there allow us to sort of get some structure, even if it was a smaller range and then higher, and to get some decent structure. But then we ended up with this massive sell-off, and at the moment there's no real indication that the sell-off is over. So it could continue to the downside, but at the same time it could just as well move to the upside. Bigger trend is up, bear that in mind. So you're looking for shorts at your peril. Your shorts should be scalps if you are scalping, and then you need to be on the sort of a much lower time frame. Where we are now, I wouldn't want to be shorting this there, because look left, what's typically happening, buyers are stepping in at this level and driving it back up. So I definitely wouldn't want to be short there. We do have this weekly level here which could be tested, so it's 37.68. That could be tested. It's actually weekly and monthly levels, but we could also just as well form a new all-time high today. 15-minute is probably where the action is going to be, in my opinion, at the moment. but looking at this at the moment, it's looking like another leg down. That could also be forming a channel flag. We're going to be governed by the European markets now. Forget about noise, because the only noise that impacted this yesterday and Thursday was the Feds. The jobs number didn't affect it. There was nothing really that came out that was driving the market in any decent direction. So tech is the one that's getting hammered at the moment. So they're down 3.5% yesterday, whereas S&P was down to 2.45% yesterday. So that's pretty much what is driving this right now. I think it's still the attack on tech. And yeah, I think to be quite honest, I think most of the long-term investors they're scrambling. Well, not the investors, but the institutions. They're not really understanding what's going on in the market at the moment, and can't blame them. What they've been taught the last 100 years is pretty much going out of the window. We've got the GameStop game back on track again, so retail traders are driving that stock up and looking to trigger another short squeeze, because institutions are back again short on that stock. So that could also be what happened yesterday as well. So, the fear in the market that the retail traders are going to destroy everything that they've been taught. So there's a lot of stuff going on, and I don't think I actually want to get involved in it today. So for me, I am sitting on the sidelines. I'm not really interested in this. It's been a tough 2 weeks. Haven't really made any decent money in the last week. So, in fact, we're in a red week this week, but that's fine. That's what stop losses are for, and there's nothing that we did wrong. That's the important part. So when you review your trades, if you did something wrong, then you need to fix it. But if your entries were correct and the market's just really going all over the place and not adhering to any structure, there's nothing really you can do about that. That's it for me, guys. I know it doesn't help a lot of you, but you know what? Money in pocket is a fantastic trade. It's always profitable, and you can always just rather go buy an ice cream or a beer and just watch the chaos and come back fighting in a new week. And that's kind of what my plan is right now. So that's it for me today. Hope it helps, and we'll catch up with you on Monday. Cheers for now.